Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, and I'm here at Verified Investing to give you all the technical insights into the market, both stocks, commodities, crypto, and anything else moving out there in the world of business. So, first and foremost, the markets are all waiting. We're all waiting for Nvidia earnings after the bell today. The markets have an implied move of 12% up or down on Nvidia. That's massive. That's a $400 billion move up or down on Nvidia. By the way, it doesn't mean that it has to move that much. It's just the options market is pricing in the possibility of as much as a 12% move. All right, let's get right into the action here. Let's take a look at the S&P pre-market. And what we're seeing is this gentle float, right? So if we look at where the markets closed yesterday, right over in this vicinity here, you can see that we're generally floating neutral to positive. So again, markets are just saying to themselves, hey, listen, let's see what Nvidia has. Yesterday was a rally day in the market, so it puts people in a positive vibe. Nvidia was up 5%, so you do have investors that are buying in or shorts that are covering Nvidia into earnings. There's no doubt there's a positive view going into earnings. Everyone's expecting big numbers, and we're not just talking meeting expectations. Nvidia must break above significantly those expectations to continue its move to the upside. But it should, right? In theory, they should knock the cover off the ball. They should give us an update on the Blackwell chips, and we should see how those go. All right, let's go on here. So we have a neutral to positive S&P 500. This is the chart of the NASDAQ 100. And the reason I'm bringing this to your attention is that we have this wedge pattern, and I talked about it yesterday, right? So this upper line goes all the way back to 2021, the bull market high. So again, it's a very significant trend line. What does that tell me? Well, it tells me that this line, should we rally on Nvidia, should be significant resistance. So again, we have our level up here. If we get a big pop in the next day or so on the back of Nvidia earnings, this would be your level where you would expect it to stall out. I also have a max upside on Nvidia of around 158 to 160, which again, you know, if that happens, you could easily see the QQQ trading up into that level. Now, on the other side, right, if we see a sell-off, we're at vulnerability on the QQQ for a major breakdown. You take your August low, connect it right here to your September low, right through your October low, and right into the recent lows. And so if the market sells off, or if we see a sell-off on Nvidia and it triggers a sell-off, we are at a vulnerable potential breakdown point on the market. So again, as an investor, do I have any clue what Nvidia will do on earnings? The answer is no. All we can do is follow the charts, and in this case, the QQQ, and we know it's in a wedge pattern, which is tightening more and more. And what we know about wedge patterns is that price, it starts out very wide, right? Big moves here. It starts to get tighter and tighter and tighter until it either has to break up or it has to break down. That's how wedge patterns work, folks. It kind of squeezes price until price is forced to make a decision either to the upside or the downside. So essentially, to summarize, we're at a very pivotal point in the market cycle here, and Nvidia could be the break point or the catalyst to a move that triggers either a breakout or a breakdown. All right, next up, let's take a look at some of the big movers today. And Target, wow, what a drop on Target. Take a look at the collapse here, down right now about 16% pre-market. And the kicker here, before we look at the chart, what we have to understand is they basically missed earnings. They came in at $1.85. Expectations were about $2.30. So they missed by a mile on expectations. Revenue missed and guidance was light. And the CEO basically said that he's still seeing people very budget conscious, right? So essentially, people are being very careful about how they're spending. Now, you might say, well, we just heard from Walmart, and Walmart's doing pretty well, so why isn't Target? Well, Target's slightly higher end, right? And so you're having people, my guess is, kind of flip from a Target shopper down to a Walmart shopper, but things aren't bad enough yet for the Walmart shoppers to have to flip to something lower like a Dollar General. And I think that's really important to see here. So if we look at the chart, let's take a look at what we have here. And we go to the daily chart, right? We're trading around that 120, 125, 130 area. What we do is we zoom out. And we say, okay, well, what's this low? Well, this is 132, so it's lower than that. We go down here. Okay, we're kind of hovering in that vicinity around 125, but if we flip back to the daily chart, we can see it even got lower to 122.85 or so. So it even got below that. So when I'm looking for tradable levels, I have to go even lower and say, okay, well, let's zoom out. Okay, first off, we see these pivot lows. Let's take a trend line here, connect these lows. All right, so that's right around 115. Then we zoom in and we say, okay, 115. Well, what about a gap fill? Okay, that's at 111. What about these high pivots? That's at 113.50. And ultimately, you see what's starting to happen. We're starting to get a confluence of major technical levels here that are right in this vicinity. And that is something we want to focus on very closely. Now, what that tells me is that if price were to drop, let's say to 115 to 111 today, I would then start to accumulate, expecting a technical bounce. Now, is there anything that says it has to drop that much? And the answer is absolutely no. It doesn't have to. But if it does, then I can be ready as a technical trader to take advantage of that. All right, let's look at Williams-Sonoma. Williams-Sonoma is fascinating as well. Huge move up here in the pre-market. And again, this stock is jumping over 20% to the upside. Now, Williams-Sonoma is more of a high-end retailer in the retail kind of home goods zone. And what this tells us is that Target is starting to suffer. Walmart on this side is still okay, but the high end is still doing really well as well. So it's kind of this middle zone of the retailer that is suffering, the consumer. And again, Williams-Sonoma, you have people that are probably heavily invested in the stock market that are doing very well, and they're still shopping at Williams-Sonoma and still willing to spend significant amounts of money. Now, we're looking at this trading at 172.50. If we flip over, we have to zoom out, right? Because, I mean, we have to go really high here. The only thing of interest that I'm seeing is at 174.50 to 175, there is a double top up here, the highest of this wide range nasty reversal candle. So that gives me a level to trade against here at the open should we pop and pierce 175. If it goes above there, what do? How do you find levels above? People always ask me this, by the way. Well, you know, if we're at all-time highs, what do you look for? Well, the only thing you can do is look for upsloping trend lines, and what I would then do is look at that. Look at this line here, guys. This is actually a great technical level. Connecting these two highs, kisses here, hits here, and it connects right through that high. And so if Williams-Sonoma breaks 175, you're likely headed to major resistance around 188. And that should be significant. So we have a 175 resistance and 188 resistance per technical levels and trend line analysis. All right, next up, let's look at Nvidia here. Pre-market, it is neutral to positive, not doing a whole lot. Nvidia, again, the upside max target I have, again, this trend line from the highs of bull market of 20. By the way, think about that. The bull market high of 2021 for Nvidia was $33. Think about that. Where is it trading? So much higher at this point, trading at 147 going into earnings. We take that line, we connect it through, and that level is right between 158 and 160. So if we go up on earnings, that would be my first level of resistance. If it dumps out, we have a gap fill at 132 to 133, and if it gets below that, you may test this lower end area here. But again, which direction is it going to go? It's hard to know. You know they're going to beat. The question is that beat going to be good enough? Can Jensen Huang talk bullishly enough? And he's a great talker. He really is, to get people excited. Can he push price up? We're going to find out in the after hours. They report at 4:20. All right, next up, let's take a look at Snowflake, which reports after the bell. Now, normally, Snowflake and Palo Alto Networks, which report after the bell, those would be pretty significant, but they're way overshadowed by Nvidia at this point. Now, if we look at Snowflake here, it is trading towards the lower end of the chart, way off its 2021 highs, which again, look at this, was up to $430, currently trading at basically $130. Now, just because price is down significantly does not mean that we will see a significant rally on earnings. The one thing I'm seeing is this trend line has been broken. So you can see pivot high to pivot high to pivot high. We broke above that. We haven't done a retrace. So if we sell off on this and it comes down, there's a gap fill here at 116 and a downsloping trend line. This would be your buy zone here. If it rallies on earnings, you'd have to start looking at this level right here. Look at this trend line, goes right through this midpoint and bring it around, and 145 would be your resistance. So 116 support, 145 resistance on earnings after the bell. Now here's Palo Alto Networks. Next, this reports again after the bell. The stock's basically trading just off of all-time highs. Look at these two trend lines here. This tells us resistance will be around 410 to 411. and support would be your gap fill at 366 to 367. Wow, crazy stuff. All right, let's take a look at Bitcoin. Bitcoin, we talked about how odds were slowly adjusting on Bitcoin. It is pushing up today. The question is, can it finally close above this key trend line? Let's go over to the chart and talk a little bit about this, because yesterday we did talk about how the more sideways chop you get, the more bullish consolidation that is, right? So yesterday it was about a 60-40. Today I would say around a 50-50 that it's going to be a breakout versus a pullback. And again, if it goes on another day, it just gets more bullish over time, with more and more investors piling in for the move, excuse me, to the $100,000 level. So right now it's trading up beautifully on the day. Let's see what it does. But again, know that we are breaching, just intraday, we're breaching that upper trend line of resistance. Let's watch to see, can the chart signal a close above here would be bullish, a confirmation would be extremely bullish, and really at that point it's a move to 100,000 you have to figure. The only thing to keep an eye on, the fear and greed index in crypto is a little bit on the higher side in the extreme greed zone. That is something that I'm very, very kind of monitoring there, because remember, when people get too bullish in the crypto markets, it can sometimes signal a top. We're not at that level just yet, but it's just something we want to watch here on the charts. All right. A couple other charts to go over here. Let's take a look at our gold chart, see what we have on gold. Gold, again, had two beautiful up days. Today, it's fractionally positive. Looks like it's a little tired here, right? You had this move from around 2,540 all the way up to current levels around 2,640. So that's a $100 move in gold. Remember the two levels I gave you? This is minor resistance right here at 2658. The big level will be the midpoint of the channel. And by the way, I know we always talk about the highs and the lows of channels, but you have to just take note of how important the midpoint has been in this chart of gold. And we can just see right here, look at all the times it kind of came into that midpoint, which tells me here, right, if we break down and we rally back, this would be your big target zone on gold. And again, that would be around that just under 27 or maybe 2,700, which would be significant resistance. Now, there's nothing that says it can't break through, but as a technical trader, you always want to err on the side of caution and say, okay, we know it's resistance. Let's respect it. Do we want to lighten some share size a little or some ownership of gold or miners at that point? That would be something that I would consider doing. All right, next up, let's take a look at silver. Silver remains flat on the day, not really moving much. It's had a little bit of a bounce like gold, but again, I would still favor downside. I know people don't want to hear that, but the chart again is still telling me it wants to at least get back below 29 here, somewhere in that vicinity. Oil has been so quiet, but maybe starting to wake up a little bit here. We can extend these trend lines out here just a little bit. I do have levels that if oil gets a big push, I would look to short. First level would be right around $75 a barrel. Second level would be around 79. You can see the two trend lines there, how we're utilizing those levels to our advantage to give us specific points of interest. We still want to keep an eye on this $65 level. As long as we stay above, I think you could float up maybe to 75 to 80 right in here. But again, if we break 65 and confirm, then at that point, a bigger breakdown has started, as clearly seen right along here, and you would expect price to go down towards that $50 level, then maybe even as low as 35. Now, the one that I'm excited about is natural gas, folks. We've been waiting patiently for our next trading opportunity in natural gas. We're getting a big push on nat gas today, up about 5%. It's getting closer to the zone. Gap fill here at 355, we'll call it, to about the 365. That is your zone for a major resistance here on natural gas. All right, so again, folks, Nvidia earnings after the bell, Snowflake, Palo Alto as well, so those will be some key ones to keep an eye on. We also obviously want to keep an eye on economic data over the next day or so, although it's not major economic data. Next week will be more economic data, plus there's a holiday, so just keep that in mind. Volume could get very light, which again, even if we sell off on Nvidia, it could mean a float next week before we get back to normalized trading in early December. All right, other than that, folks, the key again, let's follow the charts. Let's keep our logic and discipline in focus. That's how you achieve great returns over the long term. Listen, anyone can be emotional, jump on a trade and make 10%, 20, 30, even 100x with a small play. The question is, if you're emotional, and this is the problem, emotion breeds other decisions that are high risk, which eventually make your portfolio go bust. So it's all about consistency, singles and doubles. Home run hitters strike out. In this game, we don't want to strike out. We want to go to the Hall of Fame as a singles and doubles hitter. You guys have a great rest of your day. I'll see you soon. Take care.